What's up, everybody? Fed day, Fed decision day today. So, a 25 basis point hike in the Fed funds rate. That's pretty much a done deal. And it looks like it's totally expected if you look at the CME's Fed Watch tool, which tracks where the Fed fund futures are trading. That's pricing in a 91% probability. It's not 100%, but a 91% probability of a rate hike today. So I totally expect that we will see that happen, particularly given the rally that the stock market has had, and also, talk about a Trump stimulus that the Fed they're listening to that. Plus, we saw a much stronger than expected PPI reading today, up 0.4%. So I definitely think they're going to do it. How much that is factored in, that is a question. Here's what I think, okay? And let me just preface this by saying anything could happen today. So this is not a hard, concrete prediction. I'd rather sit back and wait and take advantage of whatever does happen. The reaction likely will present some opportunities. But here's what I think. Let me start off with bonds, where I think that's where the real reaction will be. I think that it is priced into the bond market right now. If you look at open interest in treasuries, I believe in the 10-year it is something like a record high or something like that, or close to it. And the short interest on the part of speculators, they have a net short position, which is extremely, extremely high. So I think bonds are going to rally after this rate hike. As far as the stock market is concerned, and it has surprised me in its strength. There's any number of scenarios here. I think you could maybe see the market initially sell off and then rally because this exuberance is still out there about what Trump is going to do. Or you could see initially a rally and then the market sell off. Any combination of those things is possible. However, I think, I'm not really making a call on what the market's going to do today, but I do think, as I have been saying, that this stock market rally is on very shaky ground. And I'm going to get into some of the details now. First of all, we had retail sales. This was very interesting. Retail sales this morning for November. November actually saw a decline in retail sales, and I went back and I checked. This is the first November decline in retail sales in 8 years, since 2008, when we had that was the Lehman sell-off, the Lehman crash, which is understandable. That was like a shock wave in the economy. But you look at retail sales. By the way, November, that's Thanksgiving. That's the so-called Black Friday. That's when everybody rushes out to the stores. We had a negative month. Wasn't down a lot, but still it was negative, the first one in 8 years. You hardly ever see a negative retail sales in November. I mean, last year it was up 0.5%. The year before that it was up something like 0.4%. It was down. So what's that all about? I mean, you look at that against the backdrop of the surging stock market and all this exuberance in that investors have about the economy and what Donald Trump is going to do. And you look at the fiscal flows. They're still negative year over year. They are not improving. And yesterday, I thought we might see something, because yesterday was the first day we got the data from, remember Friday, they did the continuing resolution, and there was a 9 billion increase. I talked about that. Nothing in there. So we are down still with the flows. By the way, last year at the same time, government spending was up about 20 billion versus the prior year. Now it's negative, okay? The bank data I've been talking about, we won't get the update on that till Friday. The dollar's weakening a bit in here, all right? Here's another thing. There was a story that I read about New York City real estate prices, Manhattan apartment prices, really starting to trend lower now. Sales are starting to trend lower. There's been a spike in foreclosures in the city. All right, a big jump in a spike in foreclosures. So you have all this stuff going on. You got the weak retail sales. You have the real estate. And by the way, I don't know if that translates or if that's consistent with the whole rest of the country, but it is happening here, okay? And then you have the stock market flying high. And you got federal spending flat to negative. You have bank lending slowing down precipitously. So doesn't add up. I mean, all this year when I was bullish because the factors, the underlying factors were all there. The strength in the flows, the improvement in the economy, all that stuff. All right. Now you have the Fed hiking rates today, probably at the worst timing you could imagine, but I'm not surprised by Yellen. I mean, they had all year to do this, and particularly at the end of the second quarter, when their own forecast for the second half of the year were showing an improvement in the economy, they did nothing. They did nothing. And that would have been a perfect time to put through a rate hike because it would have given time for the markets to digest that. And then by now, the economy would have been feeling that income boost that you get from higher rates. And that's another thing. Inflation has been rising, and that is completely consistent with what I said. I made this forecast a long time ago. I said that you watch, when they hike interest rates, inflation will pick up, and that's exactly what we see happening. Now, there hasn't been a hike in rates this year, an official, hike in rates. However, bond yields have gone up, and we see inflation going up because interest rates are reflected in the cost of all goods and services. I said that. So a rate hike is a price increase. It's a general price increase. And by the way, inflation is not good for the currency. So the dollar's days are numbered here. All right? I'm making all these predictions, and I'm giving you the reason why. Nobody else is doing this. Nobody else can do this. Nobody understands it like I understand it, and nobody is a trader in the way that I am. Okay, I went over the stop loss thing yesterday. So I'm not making any predictions on the stock market today based on this rate hike. We'll see what happens. I am making a prediction on the bond market. You're going to see it rally. The dollar's days are numbered. There's worrisome things in the economy going on right now. And when you juxtapose that against the stock market, what it's doing, it just, you're going to see there's risk. There's big risk in here right now. Big risk. All right. See you guys later. Bye-bye.